Palantir reporting fourth quarter earnings just moments ago. Let's get some more reaction with Shai Balor, Chief Market Strategist at Futurum. Shai, Palantir just reported. Results crossed the wire. We are surging here. We're up about 8% in the after hours. What do you make of the results, Shai?
First and most important, the growth debate is officially over. I mean, I think a lot of the AI bears were bracing for a deceleration in Palantir's 2026 guidance. We actually got a reacceleration. They were embracing for a low 40s. Palantir just guided a 61% growth for 2026. So that is the single most important data point in this release, in my opinion, because it's showing that growth is continuing to reaccelerate off an already massive base. And that alone validates the peak growth narrative that drove the drawdown to earnings, especially when the market is just so risk off on anything dealing with software. But this print alone proved that Palantir is not enterprise software. They truly are infrastructure. And more importantly, this isn't coming from one-off contracts or just any kind of single vertical. It's their whole business. Their US commercial revenue went up 137% year over year, and they guided to over 115% growth next year. So that tells me demand is broad, it's repeatable, and we're still very early in what Palantir's commercial build-out is going to be.
On that commercial build-out, I'm glad you picked up on that. So U.S. commercial, 137%, it's up to $507 million. That was an easy beat. I mean, the analysts had penciled in 479. What is Palantir's secret sauce here, Shai? What are they doing different?
They're essentially walking into these rooms, asking their customers, what do you want AI to do for you? And then they actually do them. They're not just an AI wrapper centered around someone else's data. They're not just some kind of marketing slogan that they're using instead of being SaaS, now they're AI. Like, this is truly what can AI do for you, and we will accomplish that for you. And I think that right now it's safe to say commercial momentum right now in Palantir is becoming the core story. It's not just a government business anymore. Government remains strong, clearly. I'm not saying that's going away, but the center of gravity has clearly shifted. I mean, the commercial TCV, the commercial growth, they're all exploding at once. And that tells me that there's deeper deployments, there's faster expansions, and these customers are seeing what Ontology can provide now. So I think the past 2 years were kind of proof of technology for Palantir. Now, I think the customers are like willing to trust what they're selling and just let it run, especially when agentic AI hasn't even started yet. We just saw this past month the ability of what AI agents can offer now. We're at that phase of the AI cycle with Claude and the Claude Code. Now, once that scales, that's another leg for the Palantir commercial business. And I think that they already did all the legwork to get that trust from these customers. Now, as agentic AI really takes off, they're more willing to explore deeper deployments. And I just think that this partner-driven flywheel that Palantir has now is just really super early. If you think about the TAM opportunity, nobody's making more money in AI other than Jensen and NVIDIA than Palantir, and you're showing more proof of that.
Shai, we have seen, to your point, this sort of broader sell-off in software, right, which has been rough. I mean, Microsoft, Salesforce, ServiceNow, Adobe. I mean, investors seem to have said, listen, we think AI is playing out in chips. We think it's playing out in Meta, but they clearly have steered clear of software. One, I'm just curious what you make about that trend and theme. And two, whether you look at these results and say, okay, but there are some names like Palantir that seem to be separated, that stand apart.
Yeah, I think there's a nuance now investing in AI applications. There used to be a time where a lot of the revenue is going to be was pretty predictable based on the contract length, the business model itself. You create one code and then you launch it repeatedly at a very high margin. I think now we're seeing signs where a lot of these software companies are losing value because AI is automating a lot of work that's causing their application to become more and more of a commodity. It makes their product a lot less unique. The difference between Palantir, clearly, after this report, is like Palantir gains value when AI shows up because it's the system companies actually run to have AI inside their business. So that essentially is going away from a company saying, like, we just added AI to a company saying, this is how AI makes real decisions in the real world. I do believe that we're in the lazy part or the fluid part of the market where anything SaaS related or adjacent is just getting taken down blindly. That will change eventually, because even if I do believe agentic AI is going to take off, that's going to create dozens, hundreds, thousands of more digital products into the world. What do you have to do with those products? You have to protect it. That's the amount of data that's going to get generated, and agentic AI is going to be wild. You're going to need security. That's not going to get taken away at all from AI agents. So, but if you look at the stock market, I mean, CrowdStrike's down, Rubrik's down, Zscaler's down. Across the board, cybersecurity is down. That shows me that the market is just punishing these companies first, then asking the tough questions later. That will change. Maybe this cycle that's going to happen, but I don't think it's going to be a quick flip of a switch. All of a sudden, software is going to be great. I think it's going to be a couple quarters to prove to the market that in this inflection point for AI agents, like the business is not suffering. In some ways, some are expanding. They're going to get rewarded. I mean, I think you're going to see a lot more openness from these software companies on proving what the AI is causing their metrics to show reacceleration this quarter, maybe next quarter, just because that's the only way you can change a narrative. I mean, MongoDB, a lot of people don't talk about MongoDB, but like they're acting pretty well against this SaaS backdrop because they've proven 3 straight quarters of reacceleration in their Atlas business. I think that good enough is not okay anymore in the market's eyes. You need to show a reacceleration to get rewarded by the market, and Palantir is clearly showing that every 3 months, and they're justifying that valuation just because they're in a league of one, especially when the AI tsunami is coming for the whole space. They clearly have the largest boat to survive that tsunami.
So Shai, who would you consider at this point Palantir's competition? Does Alex Karp have rivals, or do you think, Shai, as you said, it's one of one, it's a league of one right now?
Listen, they've had years to come up with the competition. I mean, commercial business is 3 years in, and I haven't seen one. And I just don't think there is one, because it's a similar story as NVIDIA in the AI accelerator market. Like, this was not an overnight success story for Jensen and the team. Like, they were working decades and seeing what the AI economy is going to be formed. Karp and team was doing the similar thing. We just got to an inflection point where they're able to scale their commercial business to really change the narrative of government black box to now they're the operating system of AI. So I do believe that maybe there might be some competing products, but it's going to be very niche. It's not going to be anywhere to scalability as Palantir does, because when you're a customer and you're showing you see the ROI that Palantir can offer, their competitors also see what's happening inside the organization. So they're going to be more willing to trust and adopt it. And Palantir is one of the stickiest offerings out there in enterprise, and you just don't take it out for a 70% good enough product that might save you a couple of dollars, when this truly is giving you all the information you need, providing they're owning the translation layer inside all these large organizations that doesn't matter what AI model wins, Grok, Gemini, ChatGPT, like they are truly the picks and shovels winner of all that best AI model race. And if you're going to invest billions of dollars in these frontier models, like might as well have Palantir infused into your organization, because there's only so much you can do with the information you get from these models. You need to act in the real world, and Palantir's the only way to do so. So I think we're years away from that. And Karp is just he knows this business better than anyone else. And I think he can always stay in front of what the latest and greatest is. And I'm excited to see what he's going to do with AI agents once it starts scaling up. Like, this is a once in a lifetime company, and they are proving yet again today.
Shai, appreciate that instant analysis, sir. Thank you.
Thanks for having me.
According to reports, Disney close to promoting its theme parks head, Josh D'Amaro, to replace CEO Bob Iger, who plans to step down this year. To talk about that and much more, Nancy Tengler is joining me now, Laffer Tengler Investments CEO and CIO. Nancy, it is great to see you. I hope you're doing well. We've got a lot to talk about this morning, but I do want to touch on Disney. You don't own the stock, and I'm wondering what it would take to change your mind on that. What would draw you in to those Disney shares?
Good morning, Julie. We've owned it in the past, and we exited post-COVID. Recall it had a big run-up due to streaming, but then the parks had a problem, and then there was questions around ESPN and ABC, and so the company could get one thing very right, but if the other three major areas of the business weren't coming along, it wasn't showing up in the stock price. So it's not that we don't love the brand or think that Disney is a great company overall. We just felt like there were better places to be, and I think this CEO announcement will clarify our thoughts about the future, and we'll probably wait a little bit if we do determine to get back in, let the stock settle, and then hold it again for a long-term period.
Does the leadership change, would that be a step in the right direction?
I do think so, Julie. I mean, at some point, three's a charm, and we had the same issue at Starbucks with Howard Schultz. Ultimately, the founder or traditionally identified leader, which is obviously the case with Bob Iger, they do need to move on and allow next gen to really drive future growth. And so I think Disney's done a great job of staying out of the political mix in recent years. And I think if that continues and we get tomorrow, that will be a good CEO swap for the long term.
So Nancy, I want to zoom out a little bit, talk a little bit more macro, but also through the lens of the metals and the action that we've been seeing lately, which is wild by any asset standards. I saw one measure this morning that said gold's been as volatile as Bitcoin, which is just bizarro world that we're in right now. What do you make of those moves, which I know are, some of it's technical, some of it has to do with liquidity, but what is your takeaway from watching what's going on there?
Well, one of the reasons we're not big investors, I mean, we do own the metals in our macro cycle opportunity strategy, which is one that's focused on next generation technologies that will change the way we live. So space, robotics, et cetera. We own them in there, but we don't own gold and silver. And though we have a digital asset strategy that was on demand from our clients, we really want to have a way to value what we own. And it's very difficult to value gold and silver outside of the demand question. And so you had central banks sort of starting this movement, and then you had the retail investor jumping in, and now you've probably got the hedge funds selling the metals. And I think it's just a good time to sit on the sidelines. If they pull back further, I don't think it's a bad long-term investment, but I prefer to be, in something where I'm owning a piece of the company and I know what I'm paying for it through earnings.
I'm curious, Nancy, if you share any of the concerns that seem to have driven at least some of the buying that we had been seeing with metals, right? And some of that has to do with inflation concerns. Some of it has to do with concerns about the long-term value of the US dollar, things like that. Do you share some of those concerns? And if so, are you hedging it in other ways?
Well, I think, the dollar is still the world's reserve currency. So I understand it's weaker. I understand the president thinks it's a good idea to have a weak dollar. We don't agree with that. But I do think you'd have to be pretty pessimistic to believe that gold is the only investment you can own from a defense standpoint. So we were broadening out our portfolios over a year ago, and that's how we've been able to, both our value and growth strategies dramatically outperformed the S&P last year. So you have to be thinking ahead. I would just stay away from this trade because it turned into a momentum trade. And there wasn't anyone that could really explain why they thought it was going up so much. So I would move aside and wait for things to settle. And then if you want to own gold again, you step back in then. But these swings in these sort of safe haven investments are a little bit disturbing.
Nancy, so let's then get back to something that you can get your arms around and that you guys do own, and that's technology. Yep. And of course, there's also some speculation on top of those names at times as well. Kind of where are we in the AI trade? It feels like we're in a new phase, a more skeptical phase, although we had little bursts of that last year. But this year it feels like that's kind of settled in a little bit more.
Yeah, I think you're right, Julie. And I actually think that's good news because if there wasn't skepticism, you really could make a case for a bubble. And so the question now becomes, is software dead? is the AI adoption going to make money? We listen to every company earnings call, and names we own and some names we don't own. So across economic sectors, and we are seeing that the adoption of AI is pretty robust from companies. The spending is still very low as a percentage of their total tech budget. So we think we're still early innings, but that doesn't mean the stocks are going to go straight up. They had a nice run last year. One of the names we added last year was Google, which reports this week, as you know. Well, actually, we added it in the summer of 2024 when the valuation was moribund. And, that turned out to be a good decision for us in our value portfolio, believe it or not. And you might recall it was in the Russell 1000 Value Index. So you just have to sit tight, pick your spots, and then really challenge the conventional wisdom. IBM reported last week their software business is growing at a rapid clip. They're seeing increasing interest in their software business in terms of platform, cloud orchestration. So we think there's some opportunities in names that have gotten beaten up where you can step in if you have a 3 to 5 year time horizon.
Well, speaking of names that have gotten beaten up more recently, but which have still gone way up over the past year, Palantir, which is reporting after the close, and which is a controversial stock, to say the least, in no small part because of its, forget about the fundamentals and what it does, because of its valuation, it's also controversial, Nancy. Is that one that you guys own, and what are you looking for from those numbers?
We do own it, and I think what we've observed, all of us investors, is that if you step back and look at the company 3 years ago, it was sort of top secret, didn't really know who the clients were or the end customer. Now what you're seeing is a much more public defense posture, and the U.S. Army just made an announcement that the business, they're going to center their platform on Palantir. And so I think with an increased interest in defense names, this is one that you want to own it. You just don't want it to be the largest holding in your portfolio because it is so volatile and because the valuation is so lofty. But, I've used this example with you before. The question always becomes, in a stock like Amazon that had no earnings for many years, Palantir was in a similar position. When was it too late to buy Amazon? The thing's up 175,000% since its IPO. So if you're buying transformative technology companies, you want to use volatility as your friend. We were buying Palantir at $88 a share last spring during the tariff tantrum. So you get the volatility, and that can be an opportunity if you're a long-term investor. So we're going to be watching for guidance. I mean, that's really the most important thing in this earnings season is what do these companies expect for 2026?
Nancy, I think the question that you just mentioned that you said that we've talked about before, I think is one of the most important questions for investors who are looking at technology, which is, yes, the upside can be, if not unlimited, very large if it is a transformative technology. I guess the trick is figuring out if it's a transformative technology. So how do you do that? How do you know with a fair degree of certainty that it does rise to that level?
Well, we spend a lot of time looking at management and understanding the management team. Think of it as a quarterback on a football team. We want the very best CEOs because they have the ability to pivot and manage expectations correctly and also market the company. So if you think about an Elon Musk who's long on hyperbole, maybe a little bit short on timing of his, meeting his time horizons, but he's still a transformative CEO who is focused on the future. We own Tesla. I don't think you can own enough Tesla, but Palantir is another one of those names, sort of an outspoken CEO. He is the company in many people's eyes. And so, that can drive volatility as well. But rest assured, Julie, we don't get them all right. I mean, one of our 12 best ideas is ServiceNow, and it just hasn't felt very best idea-ish. But I do think the CEO is outstanding. We have added to it on weakness, and we will continue to do so.
Sometimes you just got to wait a little longer to see if it works out, Nancy. Great to see you. Thank you so much.
Thanks, Julie.
Fifth Third Bank Corp could trace its roots back to 1858 in Ohio. Just think about what this bank has managed through since then. The rise of the car, the Great Depression, world wars, the internet bubble, and then the internet bust, the great financial crisis, a host of Federal Reserve chairs. But now the bank is about to make a little history of its own. Today, Fifth Third closed on its $10.9 billion acquisition of Comerica, which was previously announced back in October. Fifth Third has signaled to Wall Street it can yank out $850 million in expense savings over time. This as the bank makes a bigger push, I should say, into Texas and California for retail deposits, commercial business, and wealth management clients. Fifth Third Bank Corp Chairman and CEO Tim Spence is here for my Power Player segment. Tim, good to see you. It has been a while. Big acquisition, big deal by you. What's the big push here, and what's your big vision for this combined company?
Yeah, thanks, Brian. Based on your last segment, I'm hoping that you can characterize this as both the regional bank that's absolutely crushing it and the comeback kid. So, I mean, the big push here, now that we are at a point where we are one company, is to operate like one company. We did really nice progress as recently as over the weekend. We converted Comerica's swap dealer, so their capital markets platform is trading on Fifth Third's platform as of this morning. Comerica got all Comerica clients now benefit from a one-notch upgrade since Fifth Third's credit rating was one notch higher, which will be helpful in everything for the market for letters of credit, investment policies and corporate deposit gathering. And then I think in a even more exciting from my perspective, Comerica and Fifth Third client-facing bankers are going to be able to go to market today with a much broader range of capabilities. So lending products that the Comerica folks didn't have, vertical specialties that the Fifth Third folks didn't have, and within 2 weeks, more than 1 million pieces of mail dropping on what will be probably 14 to 15 million direct marketing outreaches for the remainder of this year in Comerica's footprint in Texas and Arizona and California. So big day for everybody here. I'm just excited to get to go on offense.
Tim, color me old school a little bit, but I love that you're opening up bank branches. And you just mentioned it. You're really focusing on Texas, like Dallas and Houston. Why is that the case? And why are you still opening up bank branches in the age of digital?
Yeah, listen, on a combined basis, as of this morning, Fifth Third and Comerica have a presence in 17 of the 20 fastest growing metro areas in the country. So we've incredible footprint that we're going to be able to grow into. Fifth Third's had great success in what I think of as a three-legged stool in the Southeast. So the combination of bank branches built in the right locations, award-winning technology products. So Fifth Third's mobile app won the J.D. Power Award for regional bank mobile app this past year, and then really strong direct marketing and client service, which is analytically driven in both direct mail and digital channels. So it'll be the same playbook across the Southeast. The Texas markets are unique because they're among the fastest growing in the U.S. and among the largest markets. And Comerica had a really excellent beachhead there, had not had the opportunity to invest in the branch infrastructure over the course of the past several years, and we have a proven playbook. Our branches, the new branches we've opened across the Southeast, are generating on average 50% more deposits than our peers' branches are within the first 3 years that they're open. So I think it'd be blue sky for us in the state of Texas.
Tim, over the past 5 years, I've heard so much about the need for regional banks to consolidate. One bank needs to buy another, but I would say this deal was one of the first of what could be more to come. Do you see more regional banks consolidating this year? And if so, why?
Yeah, I mean, that's a great question. I think people have forecasted the consolidation of the banking sector for a lot of years based on, I think, a couple of simple facts. One, the banking business is the least consolidated sector in the U.S., and it's the least consolidated banking sector in the world. The U.S. banking sector is. So it does make sense that over time you'll see this continuation of the trend that started with the rollback of the interstate banking bans to fewer banks. That said, I don't think it just has to be through consolidation. Like, one of the things I'm most proud of is that Fifth Third has been able to generate GDP plus organic growth over the course of the past several years. Like, if you just look at where we're going to be at the end of 2026, between the organic growth we've been able to generate and the addition of Comerica and in 2019 MB Financial, like the bank is going to have basically doubled its total assets and its return on tangible common equity since 2016. So it's been a nice story of, nominal GDP plus growth on the top line, and a very significant increase in profitability, a return on tangible common equity from 10.5 to we're saying we'll get to north of 19%. In the fourth quarter of 2026.
I'm sure you've had some time to digest this news of a nomination for Kevin Warsh to succeed Jerome Powell's Fed chair. Warsh has not hidden his fact that he wants to remake how the Federal Reserve operates. How would a remake of the Federal Reserve impact a bank like yours?
Yeah, I mean, I'm going to leave the prognostication on policy to the experts here. What I do think, though, is quite encouraging is I think the nominee for Fed chair has been clear that he believes that the Fed has a very significant role to play in monetary policy, but that fiscal policy needs to be the purview of politicians. I think one of the greatest threats to not just the banking sector, but to the U.S. economy in general is the fact that we've run these structural deficits for a very long time. And to the extent that we are in an environment where we're going to get a productivity lift from AI, and that means we can maybe have lower rates on the front end of the curve, but also some steepness to the curve as the Fed winds down its balance sheet. Like that's a pretty golden environment for banks. Rates above absolute, at absolute levels above zero on the front end, and some steepness to the curve would be awesome for our industry.
You've spoken a lot, Tim, in the past about cryptocurrency and its rise and importance. How much of a threat is crypto to the banking system at this point in its life? And I imagine it's going to get more important should that Clarity Act finally pass.
Yeah, I mean, I'm quite hopeful that we get the Clarity Act as a complement to the Genius Act earlier. Like you said, I'm a big believer that you wake up every morning when you have a new technology and you can choose to be excited or afraid. And our belief at Fifth Third is that we're better off when we embrace new technology. So we have been very bullish, in particular on stablecoins and the role that stablecoins can play as a payment rail. I think in terms of the threat to the banking sector, it really comes down to whether we recognize that if it looks like a bank and it acts like a bank, it needs to be regulated like a bank, right? And the concerns that the sector has expressed over whether it's special purpose charters or the degree to which some of the crypto companies are openly attempting to circumvent the principles that were behind the Genius Act in the way that they operate without having to be regulated like banks, that's where the issue becomes. We're prepared to compete with anybody. It just has to be on a level playing field.
Tim, I can't tell if you're on Team Jamie Dimon or Team Brian Armstrong.
I am on Team Fifth Third. Okay. I tried to be very clear about that. I represent our employees, our customers, the markets we serve.
Tim, good luck on this acquisition. Good to see you again, man. It's been a while. I know you got a lot of work in front of you. We'll look forward to following that progress.
Yeah, thanks, Brian.
All right, appreciate it.
So let's talk about those precious metals first, because obviously it has been almost unprecedented, the moves that we've been seeing in gold and silver over the past few sessions. And how much is it fundamentals and how much is it speculation, and can we separate them, and then how does that inform how you trade them?
Yeah, it's been very entertaining. So we have to go back roughly 4 decades to see similar types of moves. If we look at silver, for example, the Hunt brothers, when they cornered the market, we saw kind of similar intraday moves. But as a backdrop, you have to remember there's never been more money in the system than the current environment. It's never been easier to trade via technology. And we have sort of the proliferation of leveraged instruments, options, all this type of stuff. So market moves and volatility are increasing. So if we look at sort of the catalyst on Friday, obviously the Kevin Warsh news, he's viewed as sort of a hawkish pick by the market. I believe he'll be more pragmatic. It's really his views on the balance sheet and quantitative tightening. So he actually does support lower rates, but he wants to reverse basically what Bernanke had done via the wealth effect and asset price inflation through QEs, right? So you get rate cuts, but the view is that it's triggered through the asset channel and lower asset prices.
So in other words, all that money that you talked about that's out in the system, some of that comes back, or some of that is shrunk.
Well, if he followed through on
succeeds in doing
his prior statements, yeah, it would be a negative for asset prices, and then we get rate cuts in response to that. Now, it's unlikely that we'll go down that path. And then, of course, there was month-end effects. There was a large option expiry as well. So if we look at, kind of where we're at, so we had this large correction, but structurally, especially the case for gold, is still very compelling, okay? So we look at it, if we sort of rewind the clock a little bit, it was the Biden-era sanctions that led central banks to de-dollarize. And of course, geopolitical risks are rising, investors are looking for stores of value. So we're seeing central banks buy a significant amount of gold. And if we look at the headlines overnight, President Xi has come out and said that he wants the RMB to be a global reserve currency. And China has been a very large buyer of gold. The Polish central bank recently just bought 150 tons. Another very interesting development there is actually the crypto community. So Tether has a gold-backed stable coin. They own 140 tons of gold, and they're doing physical settlement. So they're storing the gold in vaults in Switzerland. And they're purchasing on the order of 2 to 4 tons a week of gold. Then, of course, institutions are under-owned, and the world is really sort of scrambling to find an asset that will perform in this type of environment, again, where the geopolitics are rising, and we have sort of broad debasement of currencies, right? So we're looking for an anti-dollar.
So I guess I would go back then to my first question, which is, okay, so you have all of this fundamental buying of dollar, but then you have on top of that the leverage bets, the options, the speculation. So what is the fair value? How do you even determine where gold prices should be just based on the fundamental demand? Because that other stuff can come and go.
Yeah, so it's of course very hard to disentangle those effects. A firm like ours is a systematic manager, so we incorporate many types of ideas in the strategies, from fundamentals to very technical and more pattern-driven types of inefficiencies in the market. But clearly it's an under-owned asset. You have this marginal demand through these large players. So it's really something that I expect will continue to perform. And if we look at 2025, gold was up 65%, silver was up 140%. We had a very torrid start to the year in both. And these types of price dynamics, it's very interesting, right? Because they're sort of very hard to there's a wide range of outcomes potentially. But longer term, if it's sized correctly in a diversified portfolio, it just makes a lot of sense.
Now, when you say it's under-owned, you mean by institutions? Because it seems like the latest leg up has been, at least in part, retail driven.
Yes, absolutely. But if we look at institutional investors globally, gold is, again, not a large allocation, right? So investment committees will be looking at it, thinking about it, whether it makes sense in their portfolio. And of course, gold is a less liquid market than, say, the S&P. So again, from a flow perspective, if we get sort of a shift in psychology on ownership of gold, that can lead to very explosive price action, which is partly what we're seeing.
Now, when you talk about the world trying to look for an alternative to the dollar, why has it been lately that gold has been that and Bitcoin has not?
Yeah, so this is a sort of a struggle, right? And one of the use cases of Bitcoin was that it would be a store of value. Markets are a lot about narratives. So there is like a horse race to figure out which asset will have those properties in a world where currencies get debased, right? So clearly, with the recent moves in Bitcoin, it's much more correlated to the stock market, particularly technology stocks. And it's just not emerging as a potential candidate for that, which is interesting because we could see more rotation out of the crypto industry into kind of the more traditional rails like gold. Now, silver is not something that's owned by central banks. It's more speculative. The interesting bit there is that it's actually tied to the AI build-out. So solar panels, 94% of solar panels actually use silver as an input. And prior to the run in prices, it was about 3% of the cost of a solar panel. That's now gone up to about 40%.
Wow.
So there's this sort of like indirect link to the data center build out, all the CapEx, et cetera. But central banks are not buying silver. So if you really want sort of a good candidate for something that would protect your purchasing power, the rising geopolitical risk globally, it's pretty clear that gold is emerging as that candidate.
Since you've brought up tech a few times, so I do want to ask you about that. I mean, when you're talking about silver prices going up, we know memory chip prices have been going up, costs have been going up for the data center build out. So how do you think about that in the context of your ownership of tech stocks and your strategy around tech stocks?
Yeah, so investors have to be more selective about where they go in that value chain, okay? Now, the thing is, we just had earnings, right? So we have the CapEx projections from, say, the large hyperscalers, like if you look at Microsoft, Google, Amazon, Meta, they're going to spend $460 billion in 2026. So for investors, there's all these pockets of value, and you really want to focus on the inputs into the data center build-out, where firms have moats and a lot of pricing power. So memory is a really interesting one. So OpenAI secured 40% of the global DRAM market in October. And if you look at data centers, they use a certain type of memory. It's called high bandwidth memory, HBM. There's only 3 companies in the world that can produce it at scale. One is in the US, it's called Micron. The other 2 are in Korea, SK Hynix and Samsung. And if we look at the KOSPI, last year it was up 90%. It's selling off today, but it's up 25% again this year. And what's interesting about that is they have an enormous amount of pricing power. So memory prices are going up on the order of 50 to 100% every single month because the demand is insatiable. And there's a lot of spillover effects related to that. So consumer electronics, and we saw it on the Apple earnings call. There were questions around the cost of manufacturing the iPhone and concerns about their ability to secure memory. So there's all these sort of spillover effects tied to the AI narrative and this data center build out. But if investors can find these firms that have that pricing power and they're a core input into the investment, there's still a lot of value fundamentally in those companies.
Well, and it's really interesting you say that because it's not as though this Micron situation is a secret. The stock has already soared, right? And you're seeing the hard disk drive makers that are also adjacent to the memory business, SanDisk, Western Digital, et cetera. All of them are at or near records, but there's still room to go up.
Yeah, so what's interesting about that is they're re-rating their earnings so quickly that the forward multiples are coming down. So we're in this memory super cycle effectively, and I don't see that changing in the foreseeable future. This AI build out will happen. It's the largest industrial investment cycle in the United States since World War II, right? And a significant contributor to GDP as well.
Are there other places besides the memory, are there other sort of emergent places that you think investors should be looking that are tied to that sort of picks and shovels of AI?
Yeah, it's the picks and shovel. That's a great way to describe it. You really want to focus on these inputs that are specialized, and there's just a massive backlog in terms of order books. So another one is transformers. Just to power the data centers, it turns out that a lot of European companies like ABB, companies like that are very specialized in the manufacture of these types of inputs. And again, that's like another pocket of value potentially where they have a lot of pricing power and they can pass that through. And again, the CapEx is just going up and up and up. There's this big push on this technology. The spending is going to happen.
Christian, really interesting stuff. Thanks for coming in. It's good
Thank you,
to see
Julie.
you.
It's great to see you.